our experts joining in on the show. We've got Amnish Aggarwal right here. And let's take it across to him then. Amnish, hi, morning. Good to have you on the show. What's the market construct looking like? Banks have come back with a vengeance. And of course, it's HDFC Bank leading all the way. Do you think it has further headroom to go?
You see, as far as your broader markets are concerned, your domestic inflows have been strong. If you look at, say, even last couple of months, the two negatives which were there, one was the your FI selling was continuing, which usually you can say abates a little bit in the month of December every year. And secondly, I think after the GDP numbers came, I think we have practically hit the bottom. Now with the expectation now the main elections getting over in the you can say the frontline states, plus the government now putting up some accelerator on the your spending on capex, I think things are going to look up from here. That is on you can say one side of it. And as far as your banks are concerned, I would say that if you look at, say, not now, maybe say even a couple of months back, one sector where the stocks were trading at discounts to where traditionally they have been trading at in terms of price to book, etc. So it was only the banking sector. Now the growth rates in terms of say your advances growth that has softened a little bit, but I think still banking risk reward is favorable. And I think if you look at say next 12 months viewpoint, I think banking is one stock which is definitely going to drive the incremental growth in Nifty from here on.
Okay, I'm going to switch gears and talk about autos here. And Rajesh Palviya, it's been a hot and a cold patch for autos. Mahindra and Mahindra continues to chug along higher, and then you've got Hyundai and Maruti which continue to slip lower. Where do you think the auto pack is headed?
Good morning, Nikunj. So we have witnessed, a significant corrective move in most of the auto stocks. Now recovery is taking place as broader market is also recovering. So most of the auto stocks are also, in the recovery mode. But if we compare in the auto pack, I think Mahindra and Mahindra is the stock which is, still outperforming and almost trading near to its all-time high trajectory. So I think here we could see outperformance is likely to continue for Mahindra and Mahindra. And looking at the near-term, short-term structure, once the stock crosses about 3080, 3100 kind of level, I think this rally can extend to further higher towards 3250, even 3350 kind of level also. So I think buy on dip should be your strategy for Mahindra and Mahindra at this moment. On the downside, 2920 would be your stop loss. If we analyze on the Maruti also, there is an early sign of bottoming out after this correction. Though stock managed to view breakout on the near term structure, but still on the higher side 11,500 is the immediate steep resistance for the Maruti. If at all Maruti crosses above 11,500, I think then we could see some short covering action to witness in this stock, and then possible rally can extend towards 12,000 kind of level also. So it's an early sign of reversal, but I think we will wait for 11,500 to give breakout, then we will initiate buy in Maruti also.
Okay, fair enough. So that's the level to watch out for on Maruti Suzuki. But Amnish, what's the view on defense stocks? A lot of them had corrected quite substantially, and the latest announcements with the DAC clearing almost 22,000 crore worth of orders. Do you expect this to be, let's say, a one-day pop, or do you still see the story playing out over the next 3 to 5 years?
The correction in defense stocks which happened was because they actually rose a bit too fast, and many of them had started trading at fancy valuations. Now, in the first 6 months of the year, usually, you see, every second half of the year gets more, you can say, inflows in terms of defense order. And this year, even the first half was much lower than what usually it happens. So I think in the next few months, we will see much more, you can say, order inflow and announcements coming in case of, say, defense and you can say the entire pack. So I think that will keep the interest high as far as your defense and the entire your infrastructure, cap goods, all this space is concerned. So I think your defense stocks would be more like you can say buy and dips kind of a movement where the valuations are still, I would say, comfortable, and where I think the companies are making certain, you can say, products which are strategic in nature. I think there's a decent headroom for the next few years. But in the intermittently, whenever the stocks go high, some sort of a correction can be ruled out.
Okay, it's a decent medium-term story, but let's analyze the news flow of the morning, and that's of course, the approval of 22,000 crore worth of orders. Let me take it across to Ria to get more details as to which companies are likely to be most benefited by this.
Well, absolutely. So yesterday, the Defence Acquisition Council, or the DAC, had approved 5 capital acquisition proposals worth roughly rupees 21,800 crores to augment the defence preparedness of the country. Now, these decisions aim to boost India's military awareness while also advancing the indigenous defence manufacturing ecosystem. If you take a look at the key projects that they have approved, now they have firstly approved the procurement of the water jet fast attack crafts, which accounts for a very significant portion of these approvals. Further, they've also approved the Fast Interceptor Craft, Electronic Warfare Suite or EWS, and Next Gen Warning Radar receivers as well. And they've also approved the Advanced Light Helicopters for surveillance in coastal areas. If you look at the key beneficiaries out of these approvals, we have the likes of HAL, BEL, Bharat Dynamics and Data Patterns, and also shipbuilding stocks such as Cochin Shipyard, Mazagon Dock, GRSE and L&T. So keep an eye on all of these stocks as well.
Real estate and real estate stocks are just chugging along as if there is no tomorrow. And Mish, one side we are talking about slowdown in cars, we are talking about slowdown which is happening in luxury hotel, luxury end of the luxury end of the auto segment. Passenger vehicle sales are not doing very well. There is a marked slowdown in earnings. Then what explains this uptrend in real estate? And real estate across categories is doing very well.
You see, if you look at, say, even autos, I think there is auto, two-wheelers, anywhere you look, the pressure is not so much on the premium side. The pressure has come in the segments where the you can say which are catering to the lower to middle class, and premium segments they continue to do, I would say, reasonably well. Now, if you look at all the leading listed real estate players, so their focus is more on the premium side, more on the luxury side. So I think that is why this segment actually gets impacted in the end. If you look at, say, in the, I would say, mass end of the real estate, or I would say the relatively affordable or maybe slightly above that, I think there is some impact which is visible. But as far as your premium segments are there, they continue to do well. And I think that is actually reflected in the way the real estate stocks are performing. That is one. Secondly, maybe there's a perception that in the second half, once the recovery starts, when the demand picks up or the inflation slows down, and the hopes on the interest rate cut, I think all those things are actually getting the, you can say, stock under a lot of attention even now.
Rajesh, which is the strongest realty stock or real estate stock?
I think because DLF is looking attractive, as this is the third consecutive week where stock is making higher high-low formation. So it clearly shows that there is a sustained buying action is taking place in this stock. So I think at this juncture, DLF can be looked at to buy. Possible upside target 880 to 890 we could see on a positional perspective. One can keep a stop loss around 825 to buy DLF.
The top, bet as far as the real estate pack is concerned. But Naresh, comment on a couple of these counters which are going to be in focus today. I wanted to begin by talking about Info Edge, because they came out with the JobSpeak data for the month of November, and it looks like a bit of a weak set. Now, they are saying, of course, that festive season is a typically lean time, but if you look at IT hiring, that slipped by 7% year on year. The BFS segment, which is doing well, has slipped by almost 14%. So Info Edge might be under pressure on account of that news today. And on the other hand, there's that positive commentary coming in from PNB Housing, wherein the management is looking at almost doubling the affordable housing segment. They're targeting a retail loan book at almost 1 lakh crore by FY27. What's the chart, recommendation on PNB Housing and Info Edge?
So starting with Info Edge, the stock had earlier topped out in 2021 around 7,500 odd levels, corrected all the way to 3,500, and has now consistently moved over the last 2 years. Gave a breakout about 7,500, went to 8,500, did a retest of 7,500, and now we are back to 8,500. So overall, the structure is still positive. So a dip to 8,000, say 7,800, 7,500 would still be a buy with a stop loss below 7,500. So the stock still looks interesting. The momentum is not great, but if it sees a larger dip today, that could be a buying opportunity. Going into PNB Housing Finance, the stock has been sideways for a long period of time. After that initial breakout above 850, we've come back to those levels. It went from 850 to 1150, then came back to 850. Good enough correction done, retest of the breakout done. A lot of blocks also happened. So at current levels, looks an interesting buy. Would keep a stop loss below 850. Expect an eventual bounce back towards the 1100 odd levels.
Okay. 4 points lower for SGX. Nothing in terms of a gap up start, but I think that is something which markets would like to. No one's going to complain. Let me put it this way. I'll look at the evergreen theme in the market, which is AMCs and financial inclusion stocks. AMCs would include a Birla Sun Life, it would include a Nippon AMC and HDFC AMC. UTI also, by the way, is also listed. So there are 4 now. Then the financial inclusion themes would include, let's say, a name like Angel Broking. You can throw in a CDSL. There is Carby FinTech. Amnish, which is the strongest one to your mind within the financial inclusion theme, which still do you think can compound at 15-18% for next 3-5 years?
Yeah, Nikunj, if you look at the entire pack which you talked about, you see the way your AMCs have been growing. I think the market moves up, your AUM goes up, and your earnings increase. So I think all these actually, whether you look at say AMCs like for example an HDFC or a Nippon or something like a CDSL, I think these are going to be a secular theme for the next few years. So these stocks, given the fact that the markets itself, they are likely to give you can say closer to double digits, at least CAGR over the next few years, I think these stocks can give you a few percentage point high returns than these, definitely.
Okay, point taken. So that's the best thing to watch out for as far as the financialization theme is concerned. But just let's take a
hope and caution in 2025. A lot of brokerage notes which have come out. I think this is the third. One was HSBC. Then I think there's one which came from Jefferies, and this is the BofA ML one. Everybody is talking about almost like a late single digit return or early double digit return, which is reasonable given that this year, frankly, we've had returns after correction are not all that gratifying. I mean, you add up last 3 years or 4 years of return, it is not like way above the averages if you're really talking about the index per se. So Amnish, let's understand your theme for 2025. Where do you think there is scope for outsized returns?
You see, Nikunj, there are a lot of, you can say, segments which are there. For example, if you look at this entire, your capital goods, defense, infra. So I think this entire infrastructure story in India, okay, backed by the government push, that will continue to play out. So that is one very, I would say, clear theme. And the second could be the financial. Financial, I'm not chiefly referring to NBFCs. I think some of the leading banks are there, some of the AMCs are there, and some of, you can say, the emerging wealth companies and all. I think this is the, you can say, second space, which looks quite good. The third space, I think, which could look quite interesting, and I think where the visibility is there is going to be, I think, hospitals, healthcare, pharma. This pack, I think, continues to look quite interesting to us. I think if we say move beyond that, then it will be, I think, even in terms of say the consumer pack, one can start nibbling at that selectively because many of these stocks have corrected by 15 to 20%. So there could be say near-term pressure, maybe say a quarter or so. But I think if you look at say next 12 to 15 months, many of these stocks can give you 15-20% returns from here on. So I think these are the four themes, and then beyond that, it would be, I think, very, very stock specific kind of.
I want to look at Fortis, and I'm just measuring Fortis. Fortis, we don't talk about it, but has hit a new high. And we'll be talking to the management also. But Fortis has hit a new high. 700 rupees, up 67% this year. Amnish, do you track Fortis independently of what is happening in the entire space?
Yeah, we have a coverage on Fortis, and it is one of the, I would say, the stocks where we have been, I would say, quite positive about, although it's not the topic at the current juncture. But I think as the clarity on the company, I think there was a lot of uncertainty due to which the stock actually underperformed for many, many years. But I think with that now clarity coming and the things improving on that front, I think Fortis Fortis have moved out smartly, but I think I'm not sure over the next 12 months or so. I believe maybe you can say a company like, you can say Max, or you can say Esther DM, where a consolidation is happening. I think they can give you incrementally more return, but Fortis has done well over the last year or so, both in terms of numbers and the returns have been disproportionate.
Naresh, what's your view on some of the hospital stocks? These days it's either hospitals or hospitality.
So they've been consistent in a slow and steady uptrend. If you look at all the names, whether it's a Narayana Rudale, or say Rainbow, which is a new listing, they've consistently gone up, then consolidated. So it's a secular uptrend across the board. There are phases where the stocks go through a correction, sideways correction rather than a deep correction. So overall, the structure is positive. Apollo Hospitals is interesting because that's a stock which is still not done as well as the other new names. And that is still close to a new all-time high, still very closer from that 7,500 price point. So overall, the structure is positive. Volatility is low, but there are phases where it goes through a correction, sideways correction for 6 to 12 months, wherein it does not go anywhere. So one has to be looking out for a correction in some of the names and then get in. So a lot of these names have seen very strong moves over the last 3 years.
Okay, time now to take some mid-cap ideas from our technical experts. Rajesh, you go first.
So first stock is CESC. Strong breakout of falling trend line on a daily chart. Stock is now penetrating to its 50-day moving average. Looking at the bottoming out formation on the near-term perspective, we believe that CESC can extend its gain. Possible target towards 195 we can see. So one can buy CESC with stop loss of 179. Another stock that we like is from the metal space, that is Hind Copper. This is a third consecutive week where there is a sustained buying action is taking place in this stock. So I think here there could be further more traction on the higher side. 295 is the immediate target where we are focusing. So Hind Copper can be looked at for a buy with stop loss of 279.
Okay, so those are the top recommendations, ESC and Hindustan Copper. Naresh, what about you?
So that would be a buy in Maharashtra Seamless. The stock has corrected from 1100 all the way down to 550, 600 over the last 1 year. Multiple bottoms around the 570 mark. And yesterday the stock gave a breakout above the recent swing highs. Good volume change as well. So looking at a initial target price of 750 in the short to medium term, stop loss to be kept at 640.
Okay, thanks so much for that. But Amnish, on that note, we'll let you go. Thanks so much for joining us. But let's take a look at the headlines coming in from.
If you like this video, then like, share and subscribe to ET Now.